Hello everyone and welcome to Day Trader S&P 500. Today is Sunday, May 2nd, 2021. It's our weekly Sunday update. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top ranked market newsletters. You can see our awards or highlights there, honor roll if you will, with our disclaimer below. Also want to make you guys aware that we do offer subscription services to Woodson Wave. Been around since 1997. You can see our annual and monthly subscription rates there. And while I'm thinking about it, I want to thank you guys for the patronizing of the channel. We appreciate you guys hitting the subscribe button, the reminder bell, and the like button. And it didn't show up again. My apologies. Let me do that. There is a like button down there. It's like a thumbs up. Appreciate you guys hitting that like button. Okay, we have a lot to cover today. We're going to get into the S&P, a top-down approach. We're going to look at the NASDAQ, Tesla, and I think we're going to look at the 10-year Treasury rates in the U.S. bond market. Let's start with the S&P, and we're going to go back a ways. I kind of want to go back this triangle here that I discovered way back in 2018. But triangles are fours, and that was an expanding triangle. So that made me look back for what was two. I used to think this decline from the 2000 high to 2002 low and the 2007 high to the 9 low were two different bear markets. But when looking at this 4, we're looking for a 2, and the guideline of alternation, if you will, in corrective waves from RN Elliott, and that's an ABC correction right there. There's 2, and there's the 1987 low. I used to think that this began in either 1974 or 1982, but looking back, I like the 1987. Anyway, what this chart shows is we have an advance to 1 up here, at least cycle degree, a 2-wave correction, a 3 right here, and then the 4. But what I really want you guys to look at is look at this Fibonacci multiple. We're in a log scale, a weekly bar chart, and you can see right here in 2014 that multiple caused sideways action for a good couple of years. And then what did we get? And I love this because from here to here was perfect Fibonacci. I won't get into that internal count. But right there at the January highs in 2018, that was 3. And that was a perfect Fibonacci relationship. And you can see that Fibonacci multiple, if you will, caused this 2+ year bear market. It's higher highs, lower lows. That is an expanding triangle and ended at the March 2020 lows. It's been going up ever since. And what do we have here? Look there. Right there we touched the next one, the 2.618 multiple. So let me get in here a little bit if I can and show you guys a little more closely what is going on, how this is stopping the market. And I believe I have a little pic or JPEG for you guys. But you can see here, this caused the market to stall for all this period of time here. I believe it's September of 14 into July of 16. This multiple, again, from the January 2018 high, which I can get into later. I called the orthodox top until we made new highs, and it was a wave 3 high, just like the 1999 high. I'll get into that later, into this low. And here we are again. You would think that this is going to at least cause the market to go sideways, if not down. And let me see if I have that that pic of that there. I believe here we are, the weekly. Okay, there's the 1987 low, the 2000 high, ABC wave 2 correction, 3 up there at a 1.618, the expanding triangle. This Fibonacci multiple stopped the advance, sorry for that typo there, or spelling error, for 1 year and 9 months. This one here, the 1.618, stopped it and caused it to go ultimately down for 2 years and 2 months. And here we are now, April 29th of 2021, and we've touched the multiple right here. This is either 5 and completes the advance from the 87 low, or it's just one of 5. We will know as this decline unfolds to what degree of trend the decline will be. And we can get into our Fibonacci time spiral, but that also calls for a high now. So we got time and price and multiples calling for at least a pause in the advance now. Okay, so that is the bigger picture. I'm going to jump into the 4-hour chart because we're spinning on Fibonacci time spiral from the September 2nd, 2020 high. Okay, you can see that was, well, I can label that was a 3, and here was a 4. And then we've got a, I might as well label this for you guys here. Okay, let me get into that. We have a 1, I'll fix that, a 3, a 4, and a 5. And that should be minor degree. Bear with me here while I clean this up. Yeah, way up here. There we go. Okay, so we have a 1, 2, 3, 4, 5 up from there. And you can see that was a September, and that was an ABC decline, which made a 4. And then we needed one more 5 waves up. We have it here. You can see within here, there's a 1, 2, 3, 4, 5. And you can even see in here, we can get tighter on that, a 1, 2, 3, long sideways 4, and a 5. I want to show you guys the spiral here. If I can get into that, that's not the one. That's not the. Is that the one there? Let's see. We want to get the one. Here it is. Okay, here is that same 4-hour bar. You can see everything is spinning from the September 2020 high. We caught the A down, the B up, the C down for the larger wave A. The spiral caught the B up. The spiral caught the C down with a few days of slippage. I think it was 3 days there. And since then, it's called all these consecutive highs. And it goes with this one. The last one, the turn date was 4/28. It turned on the open on 4/29. You can see if this is going to keep calling highs, the next one doesn't happen until September of 2021. But this thing is beautiful perfection, catching these consecutive highs, much like the spiral that I did way back in 1999. I called that the orthodox top in August, made a higher high in January of 2000. You can see it caught the low 55 days later. You can see our slippage up here. Then this spiral just started catching consecutive highs. Not exactly the exact high, but if you caught these turning points, you had a nice decline afterwards. And then 06, it went down a little bit then, but as everyone knows, went up to new all-time highs in 2007. So this one lasted 7 years, okay? I want to get back to this one. So far has lasted 7 months. We'll see how long it goes, how it plays out. We're going to have to wait a few months, about 5 months actually, to see what happens from here. But this has served a very good purpose, this time spiral here. Okay, so I want to move on from there. Oh, by the way, let's get, we want to see what this is correcting. And I want to get a retracement of this 5-wave advance from that high to low. You can see the 382 is 38.38 and the 50% is 37.22. And generally speaking, they usually go back to the area of the previous 4th wave, which is right in here between the 382 and the 50%. Okay, let's move on. Hourly bar. Now we're looking at this March 4 low, which is that one right there. So we're looking at that 5-wave advance. Or we keep going smaller and smaller increments, smaller and smaller degrees of trend. From that March low, we have a 1. I better label this for you guys because I've got the 3rd wave extension labeled here. So let me get back into the wave tool. Here we go. Okay, so we have a 1 up here. All right, a 2 down here, a 3 up here, and a 4 down here, and a 5. This 5, I got that off a little bit. Let's move it over here. It's a smaller degree than minor. Let me fix that. We'll make it, it should be micro there. There we go. And you can see 3 subdivides, 1, 2, 3, 4, 5. Okay, so this 5 does not equal 1, but it does it does meet the 2 minimum requirements of a wave 5. It needs to be higher than wave 3. Yes, it is. And it supports 5 waves up. 1, 2, 3, alongside wave 4, and a 5 right there at that spike on the 29th. Okay. And that 4 stays above the 1 right at it. I believe it was 41. 80, 79, something like that. Okay, so as far as wave structure is concerned, we have 5 degrees of we have wave 5 up at multiple degrees of trend, and as you'll see as we're playing out, we also have Fibonacci time. We have price and time coming together here to say this move is over. At least, we could say this 5 waves from this April 20th low, or this 5 waves from the March 4 low, or this 5 waves from the October 29th or 30th low, or possibly even from 1987. But we just have to watch that play out, okay? So I want to get back into that chart from the March 4 low. Let me see if I have a little summation of that for you guys. Is that that's it right there. Okay, here's our hourly bar. And this is where I started to do a Fibonacci time spiral. I've been doing this for decades, as you can see, from at least 1999. But I've always done it from tops, looking for lows, and ended up finding more turning point highs. This one I started from a low for the first time, and this one is dead on. You can see the first target was 3.4 was a Fibonacci 13 days later, and it hit right on it. No slippage, none at all. Okay. The next one is 3.5. It caught the wave too low. No slippage whatsoever. The next one was the 4.6 high. It was off by a day. It was actually hours, because this is hours within the day. This is 2 days of long sideways. And you can see this fourth wave. As I've mentioned before, the percentage pullback is minuscule. It's hardly anything. But it is a 4 because it's long and sideways. But they're trapping everybody in. By the dips, there's no dips, so you got to just stay in or keep buying highs. That's when they get everybody in at the top. That's the way to do it. Anyway, that one caught that. The next one in the sequence was 428. 428 was here. And then the opening tick on a 1-minute chart on the 29th was higher, and it has not been higher since. So if that high remains in place at the open on 429, then this spiral was accurate to within 1 tick or 1 minute. Of course, if it goes up to new all-time highs, it wasn't. But unless and until that happens, it is. Okay, so I think I have that. Let me see. I have that alternate count. Oh, here are the retracements of this 5-wave advance from the March low. You can see Fibonacci 382 is 4,028. Fibonacci 500 is 3970. Fibonacci 618 is 3911. And we get our, you saw our monthly subscription. I do daily reports, sometimes more than once a day. We'll look at this in a very short term, 1 minute, 5-minute scale to see the degree of trend. Okay, so let's go on. Here we have that high on the open on the 29th. You can see they gapped it up, and you can see we have 1, 2, 3, 4, 5 down here, and this is a 5, 3, 5 zigzag. You got a 1, 2. I'll put that in there for you guys. Okay, very minute scale. I love doing 1-minute charts, and it's great for day trading. Okay, let's get this in there. We'll change that degree of trend and make it minuscule. And I like the corrections in red and the advances in black. So let me get back there. And there we go. We have 5 up there. Okay, and that's A. We have 3 down, and then we have another 5 up to complete the 5, 3, 5 zigzag corrective pattern. 1, 2, and 1, 2, 3, 4, 5, 3 there, 4 there, and 5 there. Okay, and then we started down. Okay, and then of course they gapped it down. And what they're doing, as you can see, and this is a repeat for some of you guys or most of you guys, gap it way up 30-something points to shake out the shorts, and then they say, okay, now we're going to take it down even more to take out the longs. Now the longs are stopped out. Then again, a big up, and it's just shake out the shorts, shake out the longs, back and forth, up and down, and here we are again with a big wave down. They took out the longs, and here we are. I can count this two different ways, but this is where we either got 5 waves down and a correction up, or it's 5 here. This is really early in the pattern to see, and these things are tough on a 1 minute, but you can see we're going 5 down, correction up. While I'm at it, I want to show you guys what they are doing to take most of people's money most of the time. That correction there is not even it's way more than a 618, and it's even more than a 786. This second wave, or B wave, we'll get into that, the second wave cannot retrace more than 100% of the first wave. A B wave can in an expanded flat, but we're getting a little ahead of ourselves. Let me get to that 1 minute picture here. I think I have that here. Here you go. A 1 minute, there's the all-time high. 5 down and a 1. Okay. 535, ABC up for 2 in the black. Black is the primary, and another 5 waves down for 1 of 3. Okay, that wouldn't be 3 because it's got a much longer way to go. And alternately, we have an A, B, C correction. 535 zigzag there. So we'll have to see how that plays out. Obviously, the all-time high is the make or break for this wave count. Okay, I think I have, let me see if I have something else on there. Let's see here real quick. That was the 1 minute. That was the hourly. We did that. The weekly, we did that. We'll get into NASDAQ bonds. All right, we did all that. So that's it from top down, going from weekly all the way to a 1 minute bar. Okay, but we're looking for this thing to obviously proceed to the downside. Make or break is the all-time high, which is 42.18. There's some alternate counts with expanded flats, but I never like to make an expanded flat the primary wave count. So the time spirals are calling for this thing to top now. This one has been ridiculously accurate with virtually no slippage. You get a time spiral that goes from beginning of March to the end of April, and you get a slippage of 1 minute over a period of 2 months. That's pretty darn accurate. We'll see how this continues to play out. Obviously, the next few days and week is very important, okay? And did we get into, yeah, we don't need to worry about the hourly there. We're going to get into the NASDAQ. The NASDAQ, everything going from the March lows. Let me count out that 5-wave advance for you guys in the NASDAQ. We got a 1, 2, we got a 3 there, a 4 there, and a 5 there. As you can see, this 5 made a higher high than the 3. Not by much, but it did. And you can see within that wave count, let me get that for you guys, not to overstate the obvious, but we have a 1 there, a 2 there, a 3 there, a 4, and a 5 there. That's a different degree of trend. And what we'll do is make this a higher degree so that it's good. There we go. Okay, so within that 5 wave, you got 1, 2, 3, 4, 5. And as you can see, the 4 low stayed above the 5-1 high. I'm sorry, the first wave high. There's the 4 low. There's the 1 high. And you can see we've got a 1, 2, 3, 4, 5 there. Okay, so it's 5 of 5 of 5. Again, it's the same. It's all the same. So the NASDAQ helped us out as far as making all the major averages top together. They don't have to, but they appear to have done so. So we're going to see how this 429 high holds. Let's get some retracements on this if we can for that 5-wave advance. Let's do it from this low here, and that is the March 4 low. Let's see if I can get close on that, or pretty darn close. There we go. We're looking at a 382 of 13,517, a 50% of 13,302, and a 618 of 13,089. And let me move that out and get the next degree of trend. Okay, we'll do another retracement here. This is from the March lows, and it appears that the markets need to correct at least from the March 2020 lows. They could correct smaller degrees of trend and larger degrees of trend, but it feels like, looks like a minimum of that 5-wave advance from the pandemic lows of March of 2020. Okay, so these retracement levels are: the 382 is 12,921, the 50% is 12,520, and the 618 is 12,119. And you can see here that 382 to 500 is that previous fourth wave in there too. So that's what we're looking at in the NASDAQ. Let's see if I got that also. I don't know if I had that broken down. Bonds, NASDAQ. Here we go. Yeah, this is probably more accurate there, but there's that 429 high. There's a 1, 2, 3, 4, 5 of minor degree from the intermediate degree wave 4 low, which would make that a 5 up here. Retracement targets are, as you can see, 12,923, 12,522, and 12,121. Okay, let's move over to Tesla. And you can see I had the primary count in black and the alternate count in red. And for the wave 4 high came less than 1 point of violating the wave 1 low. So that is dicey, okay? So I don't like that. That's why it's the alternate count, but I still like the primary count in black. Okay, we're looking at a 5, 3, 5. 5 down, 3 up, 5 down, okay? So, and you can see that ABC correction here, and here we're looking at what's going on from the 14th high and what's going on from the 22nd high, okay? You can see our target from this high. This is A down, this is B up, C down will equal A at 418. Got it there. And I'm going to look at the smaller wave count here, get into this. Here you can see that is that April 14th high, which is this high back here. This is a daily chart. This is a 10-minute chart. You can see that 3-wave. This could count as 5 down, but you got overlap. So it could be a beginning triangle, if you will, initial triangle, or it may not. We're going to see how that plays out, but you can see a clear 5 waves down here. Okay, so we could have a series of 1s and 2s, 1, 2, 1, and 2. Let's see what this retraced. So this should accelerate to the downside once the retracement is complete. And these retracements, as you know, they've been running them way up to shake out the shorts so they can't make any money on the downside. This here is so far between the 50 and the 618. 618 is at 720. The 786 is at 735. Okay, so otherwise, unless this goes further, we're looking for this thing to go down and hit that 418. If you want the 1618 multiple, it's way out there. It's down. It's got it. There it is at 193. Okay, first things first. We need this high to hold here. That is there it is, the April 22nd high of 753. And then we definitely need this 780 high to hold there. Okay, there is a higher targets up here that I mentioned around 880 if they want to take this up even higher, but they can't retrace more than 100% of the move, which is 900 all-time high. Okay, so we'll see how Tesla shakes out. Okay, that was a nice little shakeout right there Friday, wasn't it? Okay, let's look. I had that shorter term there. There we go. We'll see how that extrapolates through the next few days or weeks. Let's look at the US. Well, let's go back on our things here before we get into that. Let's look at Tesla. There you go. We have that ABC up here where C equaled A at 772. And this B wave high was a 618 at 761, and the actual high was 780. So that was a nice spot for it to turn as it did. You can see our targets right there for wave C down, 418 and 195. I don't know if I have another one with the smaller wave count in Tesla? I do not. So let's move to the bond market. All right, this is the 10-year yield. Okay, this is the interest rates. As you can see from the March lows, we've had a 1 up. The March 20 lows is where everything kind of moved together. We have a 1 up, a 2 down, looks like a 3 up here, and we're in a 4th wave so far. It could go lower. Let's see where it could go. These are the interest rates of the 10-year Treasury. Let's get a retracement. There we go, of wave 3. We get on that there and get it there. You can see it has not hit the 382. I'm going to put the 236 in there just to see where it is in relation to where it is now, if it got there or not. And so far it did not. So we got a 1, 2, 3, 4, 5. Yeah, this still is playing around. This is a 4. It's going to be long and sideways because that's what 4s are by nature, long and sideways. Once complete, we should look for a 5. The larger trend is up. The near term, shorter trend is down, but it should give way right in here. Here our 236 is 1.475. The 382 is 1.288. 50% is 1.137, and a 618 is 0.986. We'll see how that plays out. So short term, we're looking at a wave 4 pullback in interest rates before we go up. The larger term, in multiple ways, including the 39-year bear market that ended in the year 2020 back here, has changed and interest rates are up. Let me look at that. Where is our interest rate thing here? We got Tesla bonds. There it is. Okay, here you go. Here is the price, by the way, the inverse, okay, of the interest rates. That's what I want to show you guys. There's that March 20th high. We have a 1 down, a 2 up, a 3 down. There's the wave 4 targets, and that's for the price of the T-bond futures, 30-year. Okay, so that's what we're looking at there. I don't need to read all those for you guys. That's a little self-explanatory, but that's excuse me, the 30-year T-bond prices. Prices are opposite of interest rates or yields. Okay, the most exciting thing right now is this Fibonacci Time Spiral, which has nailed every turn and within a minute of perfection, unless and until that 42.18 high is taken out. We'll see what this week brings, and until next time, take care, everyone.